Welcome to this week's market summary for all things money. If you're wondering what happened this week in the market, you are in the right place. Let's go over a few housekeeping issues to start this off. And this week, technology seemed to lead the charge. This week was quite a ride for the US stock market. The US stock market S&P 500 posted a 1.6% climb, and the tech sector was pretty much the shining star, leading the way. Amid hopes for interest rate cuts, let's get right into it. Our technology stocks were a notable 3.1% up this week, thanks to companies like Adobe delivering very, very good results. The sentiment around generative artificial intelligence got a sweet boost. Adobe's innovation in AI solutions has not only positioned it as a market leader, but also has underscored the growing importance of artificial intelligence in today's business landscape. Let's not forget Oracle's jaw-dropping 26% jump, fueled by a $300 billion deal with OpenAI. That was a huge move this week. This partnership is expected to revolutionize data management and cloud services, making Oracle a huge player in the AI field. Such developments have contributed to this week's overall optimism, and next week we have interest rate expectations with the Fed. It's a 2-day meeting next week. The investors have basically put into the market almost, I think it was a 98% chance of at least a 0.25% rate cut next week. We will see if that happens. I think the market's going to be disappointed if it does not and they hold pat, but we will see. Right now, all things are pointing to a quarter point rate cut next week, and we'll see what happens. This week's sectors winners and losers I wrote out here, and I will place this in the description. So just go ahead and take a look at that. But let's go on and take a look at now some technical analysis, and let's get right to this here. The SPY this week, if we take a look at the chart here, has shown that quite a bit more upward momentum. This AI target has been actually obliterated. It blew right through that, so we'll see how much farther this goes. This is still indicating a wave 3, the strongest wave. You do have to keep in mind that this oscillator is showing some divergence, and since this is creating like a Jaws pattern here, this oftentimes will come crashing down eventually, at least for some sort of a correction. So be aware that that may be in the cards. So the market's kind of foreshadowing that, but it is still climbing the wall here, hugging the 10-day green moving average here, and right now we are heading higher. We go on and take a look at the Dow. The Dow itself has gone up and to the midpoint of this tap box here, so it actually has reached its target. And this is also showing some divergence here, so be aware that this may be signaling some sort of a pullback. We've seen that for a few weeks now, and it may come to fruition one of these times and take a lot of people off guard. So just kind of keep that in the back of your mind that could be going on. If we take a look at the QQQ, this mimics our technology sector that was pretty strong this week. We are in a wave up 3 pattern here, so this is the longest and strongest wave. We are seeing some divergence here, and so this kind of could also be signaling that we could be due for a correction, but this could go on for a while too, so it's kind of hard to say. If we go on to the IWM, small caps are actually a little bit more interest rate sensitive, so they are suspecting that the Fed will cut this week coming here. A 0.25 point at least is probably figured in right now. Small companies can actually borrow money a lot cheaper with lower interest rates, so IWM has actually made an upwards push here to the top side of the tab box, so it is also in its target range. So we will see what happens. I do predict if this does go back down, we're seeing at least probably a correction, maybe down to the red 200-day moving average, if not going down to test this wave 4. So the low here. So just kind of be on the alert if you do see any sort of bad news hit the market, that we may experience some sort of a pullback. September oftentimes isn't the greatest positive month in the market, so that's kind of why that's kind of sitting in the back of my head. If we kind of take a look at the TLT here, which is our bond market, the bond market has just absolutely exploded this week. And when you see the bond market go like this up towards our AI target, when this increases, this is actually inversely proportional to interest rates. So when the bond market goes up, they're predicting that the interest rates are going to go down. So the bond market right now is telling us that interest rate cut will happen. We will see if that does take place, like I keep telling everybody. The VIX is actually down to pretty much its lowest level here that we've seen in quite some time. And this has kind of hovering right here. I think it got as low as around, I think it was the 14-ish area here. We're pretty low here, although this can still break to the upside if the market does go down. So it's all kind of a wait and see mode until what happens with the Fed next week. If we take a look at the metals, let's look at gold, GLD. Gold is actually rocketed up towards its AI target up here and kind of hovering. Did go back down, kind of test this 10-day moving average and is pushing higher. So this oscillator is kind of losing a little bit of momentum, so we'll see if this kind of rotates back down. But right now we are showing that this is a wave 3 up pattern, the longest and strongest wave. Take a look at silver. Silver mimics exactly what gold has done, and it's gone just absolutely bananas as well. It's created a wave 5 up here. This tap box here has technically been completed. We will see where this goes. We redraw this divergence. We're still getting some divergence here, just at a little higher area. Or we could kind of go back and do this, and we might get a little retest of the back side here. But I would probably draw this out like this, because it's more of a Jaws pattern, so we could be going back down. We don't want this to get away too far from the 10-day moving average here, because that usually signals it's wanting to at least pull back. We like to have it hover and just climb this 10-day moving average very nice and evenly. So just keep a watch on that. Going to natural gas here. Natural gas can't really make up its mind. We had this, I think, short covering rally. Now we went back down here. Had kind of an inside day here, so this is kind of going to decide which way this market does go. If we do see this break to the upside, one way or the other, this is going to probably indicate if this Friday candle here gets broken to the upside, we'll probably be going higher. The oscillator at the bottom here is showing that there's some positive momentum as well. If we do break lower, we might go down and test this low again. So right now, in my opinion, natural gas is a wait and see. We are still below all these moving averages, so that's also creating some downward pressure. If we take a look at the USO, which is our oil market, we see that the hovering price here is pretty much around 75. We can kind of redraw these lines here and kind of make a different triangle shape pattern. So this is just kind of following a nice sideways pattern here, hovering, not doing a whole lot, hovering right around the 75 region. So if we take a look at Bitcoin could be having an upwards trajectory here. It's kind of signaling that that's the way it wants to go. We'll see what happens with the Fed, as with everything else, but right now Bitcoin is signaling that it does want to go higher. Ethereum oftentimes follows suit. We do see this has climbed a little bit higher as well. If we do break this high, I think, sky's the limit essentially, because I don't think we have much data back here showing that it's been higher. So if we break this high, we'll oftentimes go up in a stair-step pattern here, and we'll probably see kind of more of a measured move. So we might see a pattern up to about the 40 range here. If we take a look at the dollar is basically forming consolidation triangle pattern here. I don't know whether this is going to break one or the other, breaks higher or lower. I have a feeling it's going to go lower, especially if we get that interest rate cut. It also has kind of a descending wedge pattern here, and that oftentimes will signal basically a coiled spring here, and I do see that probably breaking to low end here too. If basically that rate cut comes to fruition next week, like market's thinking it will. So we'll see what happens. But right now it's kind of hovering right on this support level here at around 97.5, and we'll see if the dollar will weaken. Right now the tap box here is signaling that it wants to go down to about the 92 region. Probably on the higher side of that, it'd be about the 94. We will kind of take a look at that as well in coming weeks and see which way that has moved. I want to take a look at Alibaba. It's basically just had a shot to the moon here. Very high and strong strength. The AI pattern here was signaling about the 160 area, 159.74 to be exact. We have broken away from this 10-day moving average, which I don't like to see too much, because this oftentimes will signal some weakness potentially ahead, bounce off of this, and then possibly go higher, but we'll see. Right now, BABA is a strong buy in my opinion. So if you have any comments, questions, or concerns, please leave those in the comment section below. We will go over any sort of stocks that you want to take a look at next Friday. But until then, have a great trading week and just keep an eye on the Fed. Take care.
As always, do not forget to like and subscribe to our channel, All Things Money, to see more content like this.